The global trade war triggered by U.S. President Donald Trump shows no sign of abating, with tit-for-tat tariffs hammering major economies, tanking stock markets and dimming growth prospects. The economies concerned, North America, the European Union, and China, face highly uncertain futures. But for the Middle East, which has so far been spared of additional levies, there are still reasons to worry, as well as opportunities to take advantage of. Direct impact from tariffs, like the U.S. levies on steel and aluminum imports, have just a minimal impact on the Middle East, economists say. The Gulf region, for instance, accounted for roughly 16% of U.S. aluminum imports in 2024, led by the United Arab Emirates and Bahrain, Standard Chartered MENA economist Carla Slim told CNBC. While those sectors may be affected, analysts say, the hit will be minor. But the blow to growth from a trade war is likely to hurt the price of oil, the mainstay of the region's economy. There are also immediate costs to countries whose currencies are pegged to the dollar, such as Saudi Arabia, the UAE, Qatar, Oman, and Bahrain. The US dollar has been selling off since the start of the year, making imports for countries with dollar pegs more expensive, a challenge for a region highly dependent on goods from abroad. Trade tariffs implemented by the US typically make the greenback stronger over time. However, if that happens, oil becomes more expensive, as the commodity is traded in dollars. This would give an initial boost to oil-exporting Middle East countries. But bad news may lie ahead as oil demand slows due to weakened global trade and shipping. The macro outlook for MENA, Middle East and North Africa, is set to be weighed down by global tariff uncertainty indirectly through oil prices, to the extent that tariff and macro uncertainties continue to be a drag to Brent oil prices. Slim told CNBC. Since the oil price shock of 2014, however, many of those economies have implemented structural reforms and diversification programs in a bid to lessen the dependence on oil revenue. Strengthening domestic demand resilience continues to be the best lever to immunize local economies from global external shocks, in our view, Slim said. Despite diversification efforts, however, oil still accounts for the largest single share of income, said Edward Bell, acting chief economist at Dubai-based bank Emirates NBD. For an economy like the UAE that is highly open to trade and acts as a global trade facilitator through extensive infrastructure and logistics links, a drop in global trade will also be an externally imposed headwind to growth, Bell noted.